I now hand the conference over to Ms. Charmi Mehta from Prabhudas Lilladher Private Limited. Thank you, and over to you, ma'am.
Good evening, everyone. We have with us today Mr. Lakshman Rao, CMD, along with his finance team. Without further ado, I would like to hand over the call to Mr. Lakshman Rao. Thank you, and over to you, sir.
Good afternoon, and welcome to the quarterly results conference call. Thank you all, and wish you all a very happy Dhanteras. And I hope.
Sir, this is the operator. The audio is coming very low, sir. I would request you if you can just increase the volume of your phone.
Okay. So can you hear me now better?
Yes, sir, it is better. Thank you.
Yeah, thanks. So happy Dhanteras to all of you, and hope this Diwali drives away the corona and give all of us relief from this pandemic. So I'm glad to inform the company's performance in the Q2 is very much back on track. Company is again on a good track. We have achieved a 13% increase in the volumes and compared to Q2 of last year. And of course, the battered on Q1, it is almost 7 times better in terms of profitability and 90% better in terms of sales tonnage, volume-wise. So I am glad to say that people started realizing the importance of packaging in pandemic times, especially of hygienic packaging, where IML plays a major role, the robotic IML operation. And that is where we see a good traction in food and FMCG, or even in paint and lubes. Now the drive to go for IML is increasing because it's less dependence on labor and more hygienic and faster turnaround. So these are the things we have been trying to preach the industry. Definitely some adverse times, though it's not good to have, has definitely given us an edge in pushing the new technology into the minds of the industry. So that is one of the reasons why I see the numbers are improving in spite of complete write-off of ice cream container sales in the last 6 months. Due to COVID, there was a severe drop in ice cream consumption, and that industry has very much battered, affecting our sales of ice cream containers in this summer. But of late in October, November, we noticed some festival demand coming back in those packs also to some extent. But I hope once the pandemic is under control, it will be back on track from next summer, hopefully. So as you all know, already you must have read the press release. The PAT is up by 28%, and per kg contribution of EBITDA shot up to 37.2 rupees per kg from 33.5 last financial year. So it's almost 9 to 10% improvement in the EBITDA margin per kg. The raw material costs have come down considerably from 90 rupees per kg last year, Q2, to 80 rupees per kg on average. But as you all know, we pass on majority of this advantage back to clients. So that is not the reason for improved EBITDA. Improved EBITDA is mainly due to cost controls on both maintenance costs, travel costs, and staff costs, and improved sale of food and FMCG products with higher value addition. And also in general, IML also, though not much growth overall, there is a positive growth in IML utilization, and that has helped in improving the company's margins. And company is just starting the pumps project, which we announced last quarter. The project is just going into commercial production in this month, towards the end of this month. And from December, we'll be starting supplies. We already have Wipro, Godrej, ITC, and Apollo hospitals, Apollo chain of medical stores. They are all with us for the sanitizer and hand wash pumps. So that project was completed in a record time of 4 to 5 months in this pandemic situation. And we worked to start in November, but we spilled a bit into December due to heavy rains in Hyderabad as a disrupted final stage of construction and erection of machines. But by end of this month, commercial production would start. In December onwards, we'll be invoicing. So that is a positive news on the development side. And some more developments we have mentioned in the press report, if you notice, there is one new development other than sweet boxes and pumps. The QR code printing IML, printed IML. The IML itself is something very novel in the country, and it's getting fast accepted, especially in food and FMCG, and also in loops and paint to some extent. Now this QR code printed IML enable complete traceability of each pack-wise traceability, which can arrest adulteration by unscrupulous elements which are very much present in India in the fields, any field you can say, but mainly in lubricants and paints, where it is very prevalent. So there is always a demand from the industry to create some traceability. So this QR printed IML will enable that traceability of last container and where it is sold, how it is sold, and if there is any scheme or any advantages that are passed on to the end user, that also will be printed in the QR code, both on the front and back side of the label. And the label will have a peelable area which gets peeled to reveal the gift or scheme or whatever is there, thereby very clearly showing a damage to the paints, IML. That way it can again further save the counterfeiting counterfeiting elements. So these are this new development, though it seems minor, it has a lot of implications for MNCs and companies like Asian Paints or Castrol, Mobile Shell, and all these MNCs are looking forward to this kind of solution. And our technical team has developed this and already getting this installed by December. And hopefully small trials will start from Jan-Feb, which can lead, again, keep Mold-Tek again back on the, of course, it's already in the leadership position in digital packaging, and will further strengthen our position in technologically advancing ourselves into, they call it packaging 4.0 version. So this is one exciting thing I want to share today, and hopefully it may take a couple of quarters to implement it in the country and get some of the customers hooked to it. But the initial response with some of the MNCs is very positive. They all want to experiment it and see how this QR code control help them traceability of the last pack in the up to the end user level, and also how it helps in reining in counterfeit. So these are the new developments, and companies, in spite of the COVID situation, the whole team here is charged with these new developments and trying to build up a good future for all of us. And as you know, the rights issue also was well subscribed. I can't give more details because the allotment details are yet to be filed to SEBI, but it is successfully completed. So now I request organizers to take back, and we'll go through more details through question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Archana Gude from IDBI Capital. Please go ahead.
Hi, sir. Thank you for the opportunity and congrats on robust set of numbers. I have 2 questions. So firstly, on the industry part, if you can share your outlook, how the paints, tubes, and maybe some key segments of food and FMCG are doing, and how we should look at the growth, let's say 3 years down the line.
Yeah, the outlook for the paint, lube, and food and FMCG is improving very considerably compared to Q1. Of course, Q1 was completely battered. Everyone was battered. Starting from July itself, we've seen the race of improvement, and we thought it could be a pent-up demand, but as we completed September, even October was very robust. So looking forward to a good recovery in these main sectors, paint, lubes, and food and FMCG. As I said, only industry which got more affected in the food segment is ice cream. Paint and lube certainly are returning back almost to normalcy.
Sure, sir. Sir, actually, my question was slightly on a longer term horizon. Let's say 3 years down the line, what kind of industry size we should look at in this segment?
Yeah, longer term, I'm sure everybody is positive about India and the growth story and what are all the new reforms the government is trying to bring in. And hopefully, dependence on China might come down and more indigenization and maybe export opportunities come our way. So I'm optimistic about the overall outlook for the future. And as you know, Asian Paints is also expanding its set of new plants, and Berger is setting up new plant next year. Narrowlake has set up recently at Amritsar. So the paint industry is certainly looking forward to a 10+% of CAGR going forward. But for this pandemic, this year itself would have been a fantastic year for this industry. But anyway, we lost almost 7-8 months, and I hope things will be normal going forward. Coming to lube industry, it's a kind of matured industry where you can't expect major increment in demand. But there also we are trying to improve our market share by going with new concepts like this QR code printed IML, whereby, because lube industry is the one industry which is very much affected by adulteration and counterfeit elements. So they are very keen to have a system of protecting and tracing their containers and safeguard themselves from the adulteration or counterfeit. So going forward, paint and lube, I'm sure they will do well. And in our food and FMCG sector, as you all know, more and more packaging food is getting accepted in the household, and with the pandemic situation, restaurants closed and many people are adopting to package food, either ready to use or even ordered food. So we see a lot of traction created from the restaurants, branded products, food products. Even small and medium-sized companies are very eager to go for hygienic food packaging with IML technology. So going forward, that industry also would do well. And fortunately, all the three areas of our line, we are in a position to grow along with them, or maybe better than our competitors.
Sure, sir. So that helps. So my second question is, as you rightly said, that the paint companies, they are doing really well, and even the outlook looks very optimistic. So said that P2 plans for Asian Paints with Mysore and Vizag, do you feel that we'll have to expand the capacity sooner than the later?
Yes, just to tell you, the numbers at Mysore and Vizag are very much contributed to our growth in this year. The volumes at Mysore have gone up by almost 40% Q on Q, and or half year to half year in spite of COVID. And at Vizag, the numbers have gone up by 76%, H1 on H1. That means if you look at only Q2, the growth is phenomenal. 50% growth in Q2 on Q2 and 59% growth in Vizag. So overall growth numbers are good because last year was the beginning year. But in spite of that, even in the rupee terms, we have done a turnover of almost 92 crores in the H1, as against 35 crores last year from these two units. So there is a considerable value addition from these two plants in the H1.
Sure, sir. So thank you so much and all the best.
Thanks.
Thank you. The next question is from the line of Ankit Merchant from Reliance Securities. Please go ahead.
Yeah, good afternoon and greetings for the season, and congratulations on delivering really good set of numbers. So my questions are related to some are little bookkeeping questions. One is if you could highlight the rights issue and the share warrant, how is that money going to be utilized, and what is the quantum of amount which we are gathering or raising? And second question is related to the paint segment, and if you could also share the volume tonnage across all the categories. Thank you.
Yeah, first I'll answer about the rights issue. Rights issue primary objective is to raise funds for the working capital, because the working capital numbers have shot up over the last couple of years to 83 crores. and also some of the term loans which have also come to around 29 crores. As you all are aware, continuously the company is investing on capital expansion, adding adding machineries and equipment at different locations, spending 30-40 crores every year on the capex. So while doing so, the working capital is also ballooning. So to control the working capital and reduce the term loan dependency, we have made this rights issue amounting to some 70 plus crores. And the issue is fully subscribed, and details of subscription will be available only after a day or two. That is a basic reason for the rights issue. And what's your second part of question? Sorry, I missed.
Share warrants which we are issuing, and what is the quantum of amount in that, and what are we going to utilize that for?
Yeah. The shares and warrants together are 72 plus crores, and it is an instrument which has one share and 6 warrants attached to it. And the shares are payable. 25% was paid in the issue that closed yesterday, or day before yesterday, and the balance 75% of the share is payable within 12 months, and the warrant portion is to be payable within 18 months.
Okay. And my second part of the question was related to the tonnage-wise breakup of each and every segment, like paints, lubricants, and even FMCG.
Yeah, you might have noticed that from your the previous question, the paint segment, due to the new plants at Mysore and Vizag, has shot up reasonably. In spite of that, the percentages stayed stable, rather marginally improved in food and FMCG. So for Q2, the tonnage is 4,000 tons in paint, 1,640 tons in lubes, and about 1,350 tons in food and FMCG. Compared to the previous Q2, 3,680, 1,420, and 1,100. So paints, food and FMCG grew by around 21% as against last year volumes, last year Q2. Paint grew by 9.5% and lube also by 15%.
Sure. And on the revenue front, if you could share some details.
On the revenue front, the growth in paint is just nominal, because though Asian Paints has grown, the rest of the companies in the Q2 have not really grown. So it is almost stagnant. And in the lubes grew 15%. It's basically a lot of pent-up demand, which has been shot up in the Q2 when the country started opening up and vehicular movement has started. And the food and FMCG grew by around 8.1% compared to Q2 in revenue terms. And revenue terms are not really things which you should follow for Mold-Tek, because raw material price adversely affects the pricing. So I always recommend you follow the tonnage numbers. That will give you a correct picture.
Sure. That was helpful. And just one last question related to the EBITDA margins and the EBITDA per ton basis. So you think this EBITDA per ton which we have achieved is going to be quite sustainable from here on? Because 21.6% as EBITDA margin and 37% as EBITDA per kg would that be sustainable over a longer term? Is that the right way to take it?
It will be sustainable, I guess, because the capacity utilization is improving and the product mix is improving towards high-end, higher valuation items like food packaging and IML sales for paint and lubricants. So I feel the first quarter is gone anyway, but from second quarter onwards, we wish to continue to maintain these similar EBITDA margins of around 37 per kg.
Sure. And just a follow-up, can you also give us a breakup of IML and non-IML on tonnage front?
Yeah, in IML it's more or less like last year. It was 61% last year, and it becomes 62.5, 62.4. So about 2% improvement over the last year's IML. Non-IML has come down in the same way, the other way.
Sure. Okay. Thank you. I'll come back in the queue for more questions. Thank you.
Sure.
Thank you. The next question is from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, can you throw some light on our pumps business? What kind of investment we've done? And so is it similar to the IML realizations and gross margin?
Yeah, pumps, the overall investment is about 13 to 14 crores. If you include the minute buildings and other things, we can say around 14 to 15 crores is the overall investment. All the machines have arrived, only the assembling machines, some of them are arriving end of this month, and the main machines of assembly will be coming by middle of December. So the capacity at its peak can be 8 to 9 million pieces per month, which will translate into around 60 crores per annum sales at a full capacity utilization. That is the outcome. And in fact, the per kg, if you look at it, or EBITDA margins will be definitely better than even food and FMCG, given there are more components and less weight. But the functionality of the pump is what makes it reasonably expensive, not very high value add, but in the region of around 6 to 8 rupees or 9 rupees, depending upon the quality of the pump. But the raw material content is hardly. Hello?
Yes, yes. Yeah, I'm there.
Yeah. The valuation, the raw material component of a pump, including its consumables, would be less than 40 to 50%. So that makes it a little higher value added product than our current products.
Correct. And also, sir, if you can give me volume numbers for Q2 for the two new Asian paint plants, Mysore and Vizag put together in metric tons compared
for
to
H1, for Q2 in Mysore we did 763 tons. This is weight tonnage. Yeah. And at Vizag we did 527 tons. Compared to 512 and 331. That means 843 has become 1290.
Right. And rupees in crores in total?
Rupees in crores, I think it's gone up from 25 crores to 35 crores. Or rather, 35. 25 crores turnover has become.
Correct. And last question, if I may ask, sir, what's the capex guidance for maybe this year and maybe for FY22, if you can give some light?
See, capex for different products and sustaining the brownfield growth itself would be in the region of 35 to 40 crores, including the pumps project for this current year, 2021. Probably as we go forward towards the end of the year, there may be some more additions to balance the demand versus capacity. So as of today, it is around 38 crores, including the previous year's orders and payments which were made in the current year. But overall, it would be in the region of 38 to 40 crores for the current year. Going forward, 21-22, the north plant which we have deferred may have to be set up, but we don't want to think about it until COVID is completely under control. We can't risk our senior people to COVID in the field. So this year it will be more or less on the brownfield expansions, and of course the pump is the new project which we have set up in Hyderabad itself.
Okay, thank you for the information. That's it from my end.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Shanti Patel from SP Investment. Please go ahead.
Good afternoon, sir. My question is, what will be the approximate revenue for the current year ended 31st March 2021? And what will be the probable tax percentage thereon? That is first question.
Okay. Let me answer that. As you all know, we are working on very reliable times, and situations are simply unpredictable. But of course, things are improving. If the same situation improves, we wish to continue to grow and cover the deficit of the Q1, which we suffered a 40-42% drop in revenues. So if these 3 quarters could fill the deficit and we go back to last year numbers, I feel it's a good achievement, and we are on that track, I hope. So that is, having said that, PAT also internally, our internal goal is to reach the last year PAT in spite of a severe drop in Q1. But if situation improves and economy takes off, things can be better. On the contrary, if situation worsens, it could also be difficult to reach this. So let's hope everything is fine, and then we can certainly grow if there is a positiveness in the economy and general pandemic control.
Okay. What about our market share in respect of all the segments?
See, market share in paint will be, in my opinion, organized sector, we must be around 20 to 25% because they all have multiple suppliers. In the case of IML, hello?
Yes, sir.
Yeah. In the case of IML, we are almost single source. There are a couple of players giving 5-10% of the needs. But the paint is yet to adopt IML in a big way. So, in that segment, our market share, I guess, would be in the region of 20-25%. But if you come to lubricants, we are much better. We must be having 45 to 50% market share because all the top players believe in Mold-Tek and the containers are much superior in terms of leak resistance and transport worthiness because lubricant is much more difficult to handle than a thick paint. So companies which look for better performance and IML, they come to us. So that's why in lubricants we have I'm leaving PSUs aside because they go by tendering system. In the private lube industry, our market share must be more than 45 to 50%. Food and FMCG, there are a couple of players, one in north and a couple of them in west, but they have a limited range of products. And definitely they don't have the edible oil packs what we have, square containers. So our food and FMCG as a whole, our packaging contribution is minuscule, very small. But among the rigid packaging which is being used, I think we should be more than 50% again in that segment. But that has yet to grow. In my opinion, it's hardly entrenched 5 to 6% of the demand. It has more potential to replace a lot of other inferior products, but it's a time-taking process.
So this new feature which we are going to introduce will be effective from which month, and what will be the impact on the revenue of the next year, that is 21-22?
See, gentlemen, when we introduce something new, it's difficult to get adopted as quickly as we wish. The QR code enables people to trace the containers, ensure.
Perfectly right, because competitors, if they don't have this particular feature, definitely the vendors will, the purchasers will prefer our product and pay more because they don't mind paying more if the safety is introduced, and consequently our revenue must go up. So
yeah, I can't predict the future because it's yet to be introduced. Probably I'll be in a better position to talk to you when we speak over the Q3 or Q4 results time because it is yet to be introduced. We've completed line trials and as a concept we have already found it is feasible and shown some videos to a couple of clients who are reasonably excited. But how will they adopt it? How will they pay for the additional cost? That's still at a very nascent stage. So let me not add any speculation on that. But we are excited that this can also be a kind of a growth trajectory for the company in the coming quarters. Maybe not happen in one.
I hope our competitor don't have this particular feature, correct?
Yeah, none of them have. Even IML as a very established way. They are learning the IML technology, whereas we are going forward into reverse printed IML with QR code, which might take them a few more years to catch up. So that way we are creating a step ahead for the company. I hope it will be recognized and add value to our products in the coming quarters, but I can't speculate on the revenues and numbers as of now.
But at least this new project, which you have going to be completed within a short period, involving some 15 crores investment. There you can.
No. You got mixed up. This has no 15 crores investment.
Not this one.
That's a pump project.
Pump. I'm talking about pump only. There you can estimate approximate revenue in the current year. or no?
In the current year, I don't see major numbers because only 3 months are left in the current year, December to March, 4 months. Probably we may sell about 20 million or 15 to 20 million pumps at say average price of 7-8 rupees. So probably around 10 crores turnover might be added, 8 to 10 crores in this financial year. But next year it can be reasonably well because all the top brands have shown interest in our pumps and some of them have been given letters of intent to buy. So probably next year it will be substantial. The peak sale value is in the region of 55 to 60 crores. So let's assume we get about 50 to 60% capacity utilization next year. Next full year.
Thank you. Mr. Patel, may we request that you return to the question queue for follow-up questions. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Naushad Chaudhary from Systematics. Please go ahead.
Hi, thanks for the opportunity. 2 quick questions I have. FNF side, sir.
Louder, Mr. Chaudhary.
Yeah. First one is on FNF side, sir. The realization I see is down. If I see the volume, there is around 20% of volume growth, but in value terms, it's only 8% growth. So what exactly is the reason for this realization per kg going down in FNF?
Yeah, the one major reason is the raw material cost is down by 10 rupees. That is around 12%. That itself is passed on to the client. So on revenue terms, it looks like it's only 8.13. And as I told you, the growth has come from edible oil pails, the bigger size, compared to the ice creams, which are smaller size and higher value adding. So that also could have indirectly impacted the percentage in terms of rupees. But the main reason is the raw material drop by around 12%.
Okay. And secondly, as you have, this right issues now, do you see the interest cost run rate to go down going forward?
Yeah, certainly. That is one of the ideas of going for these rights to reduce our working capital and term loans. So, which the interest rates costs have been consistently going up in the last couple of years, will certainly be controlled or reduced.
So currently we spend around 2.4 crore, 2.3 crore rupees of on the interest cost. So if you can give any number, what this could be going forward?
See, you need to understand that the instrument what we issued is partly paid and part of it is major part coming later. So the immediate impact may be marginal, but more impact will come from end of next year.
Okay. Okay, I'll come back in queue. Thanks.
Thank you. The next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah. Hi, sir. Good evening. So I have a few questions. So first is on the revenue growth itself, which you mentioned, which was very encouraging in terms of the deficit of first quarter being offset possibly in the next 3 quarters, and we already have quarter 2 with us. So just on the visibility side, the second half growth, if you just do the reverse math, it comes to around 23%. I'm sure the current times are challenging, very difficult to predict anything. But any visibility if you can give based on the order book which you already have in hand, how much possibility of this 23% you can see, because that's a very, very good growth actually.
Yeah, actually that's a target, Resham. It's not that I'm confident of achieving it. We are working towards that. We are working towards that. And if you notice the H1 on H1, we are down by 14.73%. So if in H2 we achieve around 15% growth, we may equate the sale of last year.
Correct.
So
It will
it's
be
not
just
going to be
marginally lower, yeah.
15%. So 15% looks possible as of now for the current order book on hand. But how it goes in the future, we need to wait and see. As of now, October, November is good. November so far so good. But after Diwali, how the situation stays and how the demand stays, we need to see. So, but it's our internal target to achieve at least 15% growth in the H2 to nullify the drop in the H1.
Understood, sir. Well taken. So my second question is, you mentioned in your initial commentary about, I think, EBITDA per kg of around 35 or 36 rupees, which you did in this quarter. And I think I was just looking at the past numbers, and this seems to be one of the highest you have done in the recent past. So what gives this confidence of maintaining this current margin which you have done this quarter? Is it to do with multiple cost rationalization initiative which you have taken, or is there anything else which I'm missing?
No, certainly what you said is correct. We have taken up multiple cost control measures, both be it on maintenance, be it on job works, be it on even staff cost, and not adding many additional hands, though we have expanded the pumps project. So thereby, we are trying to rationalize and reduce the cost, bring them under control. Every adverse time is an opportunity for the management to wake up call. So this adversity, we have turned it to our advantage by being more cost conscious and cutting and monitoring costs. We still have a couple of areas, I feel, where consumables is one area where we still see a lot of wastage can be controlled. Experimenting on this IML and new IML QR code is resulting in huge cost of developing new concepts. But that's one part of our strategy. So that cannot be reduced. But there could be some other areas of consumables we are focusing now to ensure that those costs also are monitored. That's why I'm confident probably we can maintain that 35, 37 rupees per kg bracket, which we achieved in Q2 to sustain in Q3 and Q4 also.
Understood, sir. And so my last question is on the warrants which you have done, rights and warrants. So my question is more from the debt perspective. We have this net debt to EBITDA of slightly higher, as you mentioned, since last 2-3 years. But it was quite comfortable. But given that now you have raised this money, going forward, is there any number which you have internally are thinking that beyond this net debt to EBITDA or net debt to equity, you will, or absolute amount of debt, you will not go ahead?
Sorry, I missed your last couple of sentences, Resham.
No, sir. What I was asking is that in terms of net debt to EBITDA or the overall debt number itself, is there any comfort level for you as a management that beyond this number you would not go? Because last 2-3 years, anyways, your net debt to EBITDA was slightly on a higher side because you were on the capex mode and your working capital requirement was also going up. So
yes. Overall debt, when you consider the long term and short term, it's coming to almost 112 crores. So the EBITDA of last year was around 81. So it's almost 1.5 times. So when during this period of COVID, when many people were struggling for working capital or even running the operations, we were of course comfortable, but we wanted to make sure that our situation won't be caught unawares in going future. So there's a conscious effort to come below 1.5 level or maybe close to 1 level, 1% one time, so that even if the operations get disrupted for any such reason in the future, will not be cast out. So or maybe debt ridden. So that is one of the precautionary measures for this issue, and that's why we are not in a hurry to collect the monies. We have also spread it over a period of time to see and make the calls. So that's the idea behind the issue.
Okay. So, sir, is it
Mr. Jain,
just from a...
this is the operator. Sorry to interrupt.
No, there's an extension of the previous question only. So just on the discipline perspective now, is it fair to assume that you will try and maintain your net debt to EBITDA below 1x going forward?
If not one, we would definitely bring it down from 1.5 closer to 1.2, 1.3, and then probably aim at 1 in the long term.
Okay. Great, sir. Thank you. All the best and happy Diwali. Thank you.
Thank you.
Thank you. The next question is from the line of Akhil Parekh from Elara Capital. Please go ahead.
Hi, sir. Happy Diwali to you and your entire team, and many congratulations on a very good set of numbers. My first question is on the edible oil / ghee packs. We had given a target of around 70-75 odd crore on turnover basis for entire year. So how far we have reached after during the first half of the year?
Edible oil continue to grow well. As I explained to you, the numbers are up by around 25% in volumes. And the Q2 on Q2 I'm talking about. And the numbers in revenue terms, the Q-Pack has achieved a sale of 100 So 13 crores in the Q2 compared to 10 crores in Q1 and 10.8 last year. So there is a growth of 21% in edible oil packs compared to Q2 on Q2, which is correct way to look at it rather than looking at the Q1, which is a deviation. So there's still a good growth of 21% in Q-Pack volumes. The main drop is again from Cadbury's liqueurs because during the COVID period, entire chocolate business was down. All were going for biscuits. So only now recently Cadbury's have restarted taking the packs. So for the first 6 months, almost it's a negligible sale of M2K. That is what we call the project code. It is lickables. So that is one major setback in the year. Otherwise, the food and packaging last year in Q1 and Q2 together, we did almost 10 crores. And this year it's hardly it's not even 1 crore. So it would have been gone up by another at least 4 to 5% had M2K volumes sustained as last year. So Cadbury's mainly chocolate and ice cream are the two worst hit in the pandemic. But they are coming back now with the festival season. Lickables is back in market. And even we see for last 1.5 month, ice cream packs are also started rolling out.
Sure, that's very helpful. And second question is on the market share gains. Like we have observed that some of the market leaders in some industries have gained market share during this pandemic time. Have we observed similar kind of thing happening in our industry as well, where we have captured some market from a smaller player who is not able to restart its manufacturing unit or is having some kind of issues?
No, you are correct. In June, July, we noticed that because many small players could not restart their operations and clients have started shifting to us. But after that also the trend continued to improve, thankfully, because people are finding it better to have reliable suppliers who have technology and who can give hygienic pack. I think more and more clarity is coming in their thought process. Instead of saving some pennies in the costing, they are looking at reliability and also sustainable packaging. So that's the reason I see things are reasonably improving for us.
Sure, that's very helpful. Just one bookkeeping question. How is IML and non-IML value-wise contribution for the quarter?
Yeah, value-wise, it is 65 last year and 66.5 this year.
Okay. Got it. Thanks a lot, sir, and best wishes.
Thank you.
Thank you. The next question is from the line of Kanishka Sarkar, individual investor. Please go ahead.
Hi, congratulations all of you. I've got two questions. The first one is, you guys are moving into this the food category, which is actually more value accretive. I wish to understand from you what's the long-term plan. over 3 years, where do you see in terms of proportion of this business of your overall? That's question number one. And the question number two pertains to, I've been reading somewhere that as a management you also have interest in this chemical sector, which is opening up big time in India and particularly in the region you operate, Hyderabad, Telangana area. Now, do you have or do you see or have you done any studies where there could be opening up of some huge potential into that chemical and pharmaceutical sector also for us?
Yeah, coming to your first question, the food industry as a percentage was 0 6, 7, 8 years ago, 6, 7 years ago, and today it is almost 1/4, 24%, 23.45%. And going forward, it will further grow. But thanks to, I have no complaints that other sectors also are improving, like especially paint, because Asian Paints certainly has given us an opportunity to set up plants near to them, and whatever growth they are getting, we are getting a reasonable part of the pie. So the paint industry also will continue to grow and give us improved numbers in the next 3-4 years. Because as for the commitment of Asian Paints, from about, if I recall, 3,000 tons of plastic in last year, they promised to ramp it up to almost 14,000 tons by 23-24. So another 3 years, they themselves are going to give us a sizable growth in business. So having said that, the overall percentage of food and FMCG, even if it grows, it cannot become 50%. Probably from 24, it can become 30% of a bigger number. But it will certainly grow, is my hunch. And coming to your next question of chemical and pharmaceutical cities coming up near Hyderabad and a huge pharma city being planned near to the Hyderabad is certainly going to help us to widen our product range. We already have entered into the sanitizer pumps and hand wash and disinfectants and all that sprays and pumps we are entering this year. And going forward, we also can, this is a similar industry where we can go into value-added products like packs for pharmaceuticals, powders and tablets, and anti-chill-resistant caps. Such areas of pharmaceutical, we still have some scope to expand. But today it is too early to talk because there's the parks and industries are yet to take off. But if China is restricted and India is promoted as a pharmaceutical hub, Hyderabad is going to play a major role, certainly, because all the major players are here. And we will gain if we can tap into that. And that's why once we got the FSS4 certification, which is almost close to the pharmaceutical standards of container manufacturing, we need to move a bit forward to get into the pharma approved standards. So, but as of now, we don't have any plans concrete because that pumps project is to take off in the next couple of months. But as the opportunity emerges, we can also take a bet on it.
Yeah, just an added question to it is how is the competition, how do you see the competition in compared to our company? Are they becoming aggressive or they are financially weak, or you find that they will eventually, fizzle out because of their inefficiencies? How do you see that part?
I don't want to comment much on my competitors. Definitely, nobody is weak financially. They are doing fine, I guess. And they have capable hands and investors behind them. The differentiator even today is the technology. While our competitors struggle to reach to our standards in IML, we keep moving up with varieties of applications and new concepts which are unique to us and unique to the industry. Like the QR coding on the IML is, I can say in the world, it's almost very, very nascent. And our technical team has already broken the ice in terms of, as you know, IML gets embedded while molding itself. So if you want to have a peelable area, you should have a technology to make sure that peelable area is not embedded or not stuck. So you need to find a solution how to avoid the area to be not embedded in the plastic. That is one. And then the QR code has to be printed on the reverse. So you need to have printing machines which are capable of reversing the film at the time of QR printing. And we are in fact planning 2 QR prints, one inside, one outside. Outside wala gives data of the pack, where it is made, where it is used, filled, which plant has filled it, and what is the grade, and blah blah blah, everything standard for invoicing purpose. The same, it will have a unique number which will be replicated inside, and that number also printed simultaneously at the, again reversing the print. So there is a printing machinery that is required which has that capability. If you all know, last 6 months ago we imported an Italian flexographic machine with these attachments, and now the QR coding equipment is being aligned with it. That work we are completing in the month of December, and we'll be able to start trials from January. So this is a futuristic concept in IML. So this is how we keep ourselves growing beyond competitors, and that's how we maintain our edge. So it's nothing to do with financials or inabilities or inefficiencies.
Thanks so much. Thank you.
Thank you. The next question is from the line of Richa Agarwal from Equity Master. Please go ahead. Richa Agarwal, your line is in talk mode. Please go ahead with your question.
Am I audible now?
Yes.
Yeah, Richa.
Yeah. So my question is regarding the receivables on absolute basis and even in terms of receivable days. It seems to have gone up. Is it a function? Is it due to the pandemic or the product mix? And what's the outlook on that?
Receivables are somewhere around 50 days now. I think, has it gone up, Raman? Same level? Not much of a change in the receivables space. But of course, during the pandemic, small and medium companies have suffered, and there were some delays. But our major players more or less stuck to their standards. So the receivables have gone up certainly. Say the sales have gone up by 14%, whereas the receivables have gone up by around 24-25%. So there is some slowdown in the payment cycle due to the pandemic impact.
Okay. And so my second question was, a few months ago, in quarter ago, you were talking about talks with online food apps like Swiggy and all. So has that been, you were in talks with, online food deliveries apps like Swiggy and all, some kind of business opportunity we were exploring. So where we are on that, is it on hold now? And, what is the visibility in the coming months or quarters?
Yeah, it was still on hold, but definitely we see a lot of traction from the restaurants, individual restaurants, individual small packaged food companies who pack for Ramjan, who pack for Diwali. Actually, we have introduced a set of molds, a set of products from half kg to a quarter kg to 1 kg for sweet boxes. But the project again got delayed due to the delay in molds and delay due to COVID. But we could launch it before Diwali, and few supplies have been affected in the first week of November. And the response is reasonably good, though it is not a huge segment. We wanted to be there for the sweets and other consumable products.
Okay. And so this last question is regarding this QR code. You see this as something that will help us boost our margins significantly, or help us capture higher market share? This might be coming up with some increase in cost. So, what would be the response from the end industries? Will they be open to taking it at a higher price, or, with the existing customers?
Ma'am, Richa, can you repeat it briefly?
Sir, my question is on the QR code technology. The aim behind this technology is to capture a higher market share, because I believe that it will maybe come with some increased cost for the clients also. Or do you already see that kind of acceptability, and both market share and margins are likely to increase significantly because of that?
As I told you, I don't want to speculate on a new technology which is yet to be proved. But of course, the idea is to increase the market share and EBITDA by adding a value to the customer which he cannot resist. Obviously, it needs a lot of thinking from their side also, because as somebody said, we may become a single source vendor, and again that could be a restraint for some of the major companies, because they have the multiple vendor policy which they don't change. So one of the reasons why our IML is still not penetrated in the country is most of our competitors are not able to produce at our cost and at our quality. the basic IML containers, especially in the bigger size. So when it comes to a QR coded IML, again the same thing could be a restriction. So unless we see how this is accepted, and as you correctly said, if let's say take an example of Valvoline. Today Valvoline buys around 60-70% of their needs from us, and they have another one or two suppliers giving the remaining 30%. And today if they wanted to shift to a QR coded IML, and the other clients, other customers are not ready, suppliers are not ready, either they have to not to adopt QR or adopt QR and take everything from Mold-Tek. So such decisions, how they react, I can't comment upon. But certainly we see that this value addition will attract better market share and,
Yeah, good luck with that. And the last question is on the capacity utilization, where we are on that currently.
See, capacity utilization, I always tell you, achieving 75% is our always motive, given our variety of products and variety of small and big products we mold on a same machine. So last year it was, in the best of the times, it hit 77-78%. Again, last quarter it was pretty bad. And this quarter we are back to normal in the range of 75 to 80, 77-78%. So things are slowly coming to the normal level of utilization.
Okay, great. All the best and happy Diwali, sir.
Thanks, Richard.
Thank you. We'll take the last question from the line of Kush Joshi from Kitara Capital. Please go ahead.
Thank you for the opportunity, sir. And congratulations for the performance in this quarter. Just one question. Sir, as far as Mysore and Vizag is concerned, so both the plants, what is the capacity utilization of these two plants?
See, the capacity of each plant is close to around 3,000 tons per annum. At Mysore, we achieved 1159 tons in the H1, and at Vizag, it is around 800 tons. So we are operating around, say, 70% plus in Mysore and around 58% at Vizag. And as their numbers are improving, of course, the Q1 is gone. If you look at only Q2 in isolation, we did 763 tons. That means almost 90 plus percentage utilization at Mysore and around 70% utilization at Vizag. Going forward, we are again adding some more balancing equipment at both the plants to expand the capacities as per the guidance given by Asian Paints. So as of today, they are anywhere around 60 to 65% capacity utilization on average. But we'll be still adding some more balancing equipment to keep us ready for their next year projections.
So that will be for 22, the new additional balancing equipment.
Additional machines only. There is no need to have the buildings and other land and all. It's already there. So what we need to add is maybe few machines at Mysore and Vizag. That will enhance the capacity from 3,000 to at least